Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're taking a little different slant on these fabulous harmonic numbers and ratios, and we're going to have a look at them on an intraday chart. Now what you're looking at here is the Australian 200, which is the XJO index. This is live data. If you watch over through here, you'll see that the market's actually moving. This is recorded Wednesday, 19th March, just after 10 p.m. Australian time. The market is actually currently trading. What I wanted to do was to show you a really simple technique that some traders use in their day trading. So we're talking about opening and closing a position within the same day or within the same session. These are hourly bars. And what I'm going to do here is to put the Fibonacci retracement tool on. You can see there was a significant low which occurred at 4 a.m. early morning Brisbane time. The market went from this low at 77.25. It continued to run up until 9 a.m. March 18, where it made a high price at 79.20. Now from that point, the market went through a pullback from 79.20 to almost 7,800. Now, for some traders who are shorter term traders, they'll be looking for clues, signals to enter positions, maybe looking for 5 points, 10 points, 20 points. And if you're trading that 20 points at $100 per point, well, then you've just made $2,000. And that can be done fairly quickly and fairly easily. So let's just have a look now. I'm going to take a Fibonacci tool. This software package I'm using is TradingView. I'm going to take a Fibonacci retracement tool. I'm going to lock it onto this low, and then we're going to bring it up to that peak, and we're going to have a look and see what the market's done. So if we take the major low to the major peak, you can see through here, we're looking at the Fibonacci ratios, 23.6, 38.2, 61.8, 76.4. They're marked on the chart with the dark lines. And of course, Gann's work that I've studied extensively just warned us to watch what happens around the halfway point between the low and the high, because you can get some substantial reactions that occur around that halfway point. So, from 9 a.m. on the 18th of March, when the market made its peak at 79.22, it went down and it came down to the 38.2%, almost exactly. That's 78.46, and the low price is 78.47. So it got to within 1 point of the low. That's at 1 o'clock in the afternoon. Then it found some support and started to rally. So if you have clues, techniques, strategies, or signals that tell you that a top might be in place here, and remember, you could easily break this down into a 5 minute, a 2 minute, a 1 minute, whatever you're trading. But when the market gets to this level and then starts to show a reversal or an exhaustion of the selling, you can lock your majority of the profit in the trade in, because you know why the market is reversing at this Fibonacci ratio. Now, what we can see a couple of hours later is at 7 p.m. at night, the market moves up to the 23.6% level. It touches that perfectly. The high price here is 78.74, and the price for the Fibonacci level is 78.74.9. So it's within 1 point of the Fibonacci level. 3 hours here, it refused to cross that level, then puts in a lower top, lower bottom swing and starts to decline. So we know why this is a top, because it's reacting to a Fibonacci level, and the market goes from 78.75 all the way down here to 7,800. Now again, that's a 75-point move. If you take half of that, 20 or 30 points, and you've got $100 per point, well, you've just made $2,000 or $3,000 in a couple of hours. So what we know is that the market is reacting to these Fibonacci levels. Now, there was a low here at 2 a.m. Brisbane time, and you can see here that the low price is 78.01, and the Fibonacci level at 61.8% back from the top is 7,800. Within 1 point and the market for 1, 2, 3, 4, 5 hours refuses to cross the Fibonacci level. What we know as traders is that if the market's getting support, it's likely to find a rally, and when it crosses above this 50% level here, you can see that anywhere around 78.30 would have been a reasonably safe proposition for a trade. And at 78.30, well, the market goes all the way up to 78.60, 78.80. Again, another 20 or 30 points from knowing why the market reversed at this level. So this low, this top, and this low are all reacting to the Fibonacci ratios on an hourly chart, which gives shorter term traders a fabulous opportunity to make some profit in these volatile markets. I hope that makes sense for you. And of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.